gold from two different time periods overlaid on top of one another. So the blue line is 2010 to 2012, a 2-year period starting from January 2010 to January 2012. The red line is January 2019 to present day, so January 26th, 2021. And what we're noticing is that these two lines have a very close price pattern. The magnitude of the price rise and drop have also been similar. Can you comment on this similarity?
First, it's a great chart, David, and it shows that there is a very, very positive correlation between these two time periods, which makes sense on a fundamental basis. In both occasions, we're starting at a point in which there was an economic contraction, there was an event that really changed the nature of how our GDP was growing. And in the case of the banking crisis, in about 2009 was the beginning, and really the first time the Federal Reserve implemented a kind of new facet to their monetary policy, which was quantitative easing. They began massive purchases, adding it to their balance sheet to provide liquidity, and they brought interest way down. This had the effect of taking gold literally from about $700 up to the record high with very few corrections, and that's what we're seeing in the chart. What I'm seeing is that we are seeing the very, very same kind of action because the global pandemic, which really affected the markets most in March, is also when the Fed stepped in, did quantitative easing, and they continue to buy about $120 billion worth of bonds per month. So they're swelling the asset sheet again. So you've got economic problems, you've got the Federal Reserve stepping in. And that is unique to both time periods. And I believe that's why we're seeing such a positive correlation between those two periods of time.
If this correlation holds, take a look at this next chart. It's the same chart, except all we're doing now is extending the blue line from 2010 all the way to present day. And so what we're seeing is that if we assume that the red line is to maintain this correlation with the same price pattern as 10 years ago, then isn't it possible, Gary, that we're going to see a multi-year decline down to back to 2015 lows and then a consolidation for another 2-3 years, perhaps even longer?
It's absolutely possible, but I think that it is less probable or less likely now. And that is because the unique environment we find ourselves in, not only are we doing quantitative easing, interest rates near zero, but we've spent in the first round $3 trillion of fiscal stimulus. They bailed the banks out last time, but this time they're providing capital in another way, the Treasury is. So you've got the fiscal stimulus of 3, then you add another 900 billion. That came out at the end of last year. And now President Biden's trying to push through another $1.9 trillion aid package, fiscal stimulus package. And based upon that, and based upon the timeline that it will take for the vaccine to reach herd immunity is still, months away, 3-4 months away. My sense is that although we could see a further decline, when we look at the gold chart that I presented, you'll see, I think we hit our bottom in November of last year when the market traded to a low of 1775. In other words, in the period from 2009 to mid-2011, you hit that high of $1,920, then you had a multi-year correction. In this case, we hit our high in August of last year, and then from August through November, we had a steep correction. It basically corrected 50% from the move of March when gold was trading at 1450 up to 2088. The low matches precisely to a 50% retracement point. So I think that we could have seen a shorter correction, and this of course changes everything, because if we continue to have larger debt, if we continue to implement these programs that are truly needed and helpful for the millions of Americans that are unemployed, for the businesses that can't keep their doors open because different cities are locked down. That debt is going to come back one day. And there's an old saying that Barry Commoner used to say, and there's no free lunch. At some point, we will be presented with the bill for all of these expenditures. And so for that, that's the reason I think that this might be different.
Okay, so eventually these two lines will diverge.
That's possible, yes.
All right.